So this video is dedicated to Mr. Anando Das Gupta. He has sent me this email on 28th of October 2025. So it's like I'm replying quite late. It's a base count query. So he says, "Hi Rohit, I was randomly going through a chart and I got some queries on the base count. I have marked my queries in the screenshot below. Please note that I have not done any analysis on this stock. This question is related only to base count. Please help me out with the answer to my query." So I sent this screenshot. Regards, Anando Das Gupta. So the query is only related to the base count. It's got nothing to do with analysis. Plus the stock name is mentioned here. So a quick disclaimer. I'm a SEBI registered research analyst. Please read my standard disclaimer in the description of this video. I don't give any recommendations or advice, nor do I write any research reports. So he's talking about base count here. So you see here from this bar, this is a weekly time frame chart. Base counting is done on weekly time frame chart. So after this bar, you notice the next three bars, the high of the next three bars is below the high of this particular bar. Correct? So that's where the base starts to form. We need minimum 3 weeks of consolidation. And when that bar gets broken on high volume, from there, this is the pivot point. From here, you measure the distance. So he has measured the distance from here till here, which is 28%. Now, when a stock breaks out of a base, when it goes up at least 20-25% from that pivot point, and from there, if it starts consolidating, that is what we call the next base. That is when we start counting the next base. So if this were base 1 or base 2, then this could be the next base, like base 2 or base 3. Okay, so now since this has gone up 28.78%, after this bar, you see 1, 2, 3. There are 3 bars where the high of all the 3 bars is below the high of this bar. So the base counting begins. One mistake that I see here is the blue, green, red. This should not be drawn on a weekly time frame chart. This blue, green, red combination is applicable only to the daily time frame chart, because you will notice that the blue plus green, that area, does not seem to be exactly equal to the area, the red zone. Ideally, the blue plus green is the top half and the red is the bottom half. So blue plus green should be equal to the red, but here it doesn't look like. You know why? It's because this is a logarithmic chart. This is not a linear chart. That is why I say the daily time frame chart is a linear arithmetic chart, which is a candlestick chart, and a weekly time frame chart is a bar chart, which is a logarithmic chart, which you see exactly what is given in William O'Neill's book, How to Make Money in Stocks. Okay. So this analysis is correct. Here he has written 28.78% from previous weekly pivot to high of this bar. So he's talking about this bar. So from here, it has gone up 28.78%. Should this not be considered as base 4? So that means if this is base 3, his question is, why is this not base 4? It is not marked in MSI. MSI means Market Smith India. Or is close price considered for starting next base? Well, his analysis is correct. If this is base 3, I would consider this as base 4. Let's go to Market Smith and see what they have shown. So let's go to Market Smith. Let's type here. The name of the stock is Shiley. We have to go to the weekly time frame chart. Let's open this. I will click on weekly. Okay, so look here. So this is called stage 3B4. Okay, now ignore what is given in the bracket. It's second part of base 3. So basically it is base 3. Okay. Then after that it goes up. Now this is base 4. So I don't know why he's saying they have not marked it as a base. I can clearly see from base 3, it has gone to base 4. I'm not sure why uh, he has written this in the email. It is not marked in MSI. I don't know. I can see it in the MSI that it is clearly marked. You see, this is base 3, then the stock breaks out. This candle from here, the base 4 starts. Okay, so forget what is given on trading view, markets may just notice that from this base, when the stock breaks out of the base, if it goes up around 20 to 25%, and from there it starts consolidating. Consolidation means minimum 3 weeks of consolidation. If you get that, that's the start of the new base. If even if MarketSmith doesn't name this as base 4, I would consider in my mind as base 4. Okay, because I do my own analysis, because MarketSmith is just a tool for me. Okay, I will do my own analysis. This is good to observe and study and things like that, but I can use my own judgment also, right? So that would be my analysis on this email. So I thank Mr. Anando Das Gupta for sending me this email, for raising this point, because base counting is very important. Preferably, it is better to stay in base 1, base 2, base 3. Base 3, as Mark Minervini says in his book, is a tradable base. Tradable means when it goes up 20-25%, just close the entire position. Base 1 and 2, he calls as investable bases. So you can ride the moving averages to capture a bigger gain. Base 4 and 5 ideally should be bought only when the market is strong, when it's in a confirmed uptrend. And you should be very quick in booking the gain, because by the time the stock goes from base 1 to base 4, it could have gone up 100, 200 or more than 200%. You have to see from base 3 to base 4, is the stock extended? If the stock has gone from base 3 to base 4, but during that time it has traveled like 50 to 70%, or anything more than 25, 30%, then base 4 is a dangerous base to buy. But if from base 3 to base 4 it has gone like 20-25%, base 4 could be bought assuming the market is in a confirmed uptrend. And an additional confirmation could be that the stock is fundamentally strong, or at least its fundamentals are not deteriorating. This is the way I think about stocks and bases. This is the way I combine technical and fundamental and everything, our orange trading system, right? So I want to teach you how to think. I don't want to tell you what to do, because that way you will not learn. I want to help you learn how to think. And these emails that I share, I choose to share the name of the person who has sent me the email, because that's just out of gratitude. And the person deserves it, because he has taken the time to write an email, taken the time to send a screenshot. This video that I have made to answer this email, this video will help answer the questions of a lot of other subscribers, maybe thousands of subscribers who might have the same query. That is why I take the email. I give credit to the person who has sent me this email. I give gratitude to the person who has sent me this email, and I discuss it to the best of my knowledge. Thank you so much.